So here's an example of, kind of how I'll look at this analysis. So here's Roku. And like NVIDIA, its earnings, a lot of these stocks will always have their earnings on specific same days. So with Roku and NVIDIA, they're typically on a Thursday, and then that gives you, the expirations the next day. So in this example, you can see Roku here was traded at 137.50, 1 day till expiration. Look at the implied move, the implied volatility here on that option series, over 200%, huge, right? So the expected move would be that it could go up $16 up or down, and that is just one standard deviation, and it could go higher than that. So you can see Roku is over 200%. Now normally it's maybe, 70 or 60, right? So huge, 2 times the norm typically. But this presents a couple of different opportunities. Number one, high implied volatility that potentially maybe you sell, and the other is potential for a big price spike. So that's Roku the day going in before the close, and before the close, and then the earnings are going to be released after the close. So you can see that uncertainty spiking that up. And then the next day, look where it is. Next day, it totally collapsed back to kind of the normal range. Now it's collapsed down to 127, and the implied volatility collapsed back to 73, which was kind of the normal range. So in this one, you can see volatility collapsed and price collapse of 7% to the downside. So a number of things potentially we could do there to take advantage of both of that that scenario. So here's kind of some information I'll look at just to kind of show you the data. So here's Roku. So this is showing the implied move history, okay, as it approaches its earnings release. And so you can see this is what we call the straddle cost, which gives you this implied move. So in this example, you can see here it was trading before the earnings release, the close of that day, it was trading at 165, and the implied expected move, theoretical move, was that Roku for the next 1 day only could go up 10 or down 10%, plus or minus 10%. And then you can see the series before that was, it was trading right here, expected move up or down 11, series before that, etc. So you can see this has potential for really big moves, okay? So that tells you, okay, what are we going to do with this one? Well, it has big potential price spikes, so maybe we'll play this for a big price spike up or down, all right? So then I want to look at, to validate that, okay, that's theoretical, but what did it actually do 1 day later? So looking at this data here, you can see then 1 day later, it was down almost 7% at the close that day. That'd be the Friday the next day. The series before that was down almost 8%, down 6%, down 16, up 20, up 28. So this tells me a lot about Roku, what to do or what not to do. All right, so this tells me one idea would be, hey, maybe we should do some strategy where we play it for a big price spike and not risk selling implied volatility where we could get run over and crushed. All right, so then you just kind of look at it a little bit more in depth, and you can see here, here's the history. So this is over 8 cycles in this example, just going back 8 cycles. And so here's the implied expected move history, going in. So you can see I averaged that out over these 8 cycles, and the expected implied move was 14.5% up or down. Now the interesting thing here is if we look at what did it actually do, you can see it actually exceeded that. So it was greater than 1 standard deviation on the average. It was 16.7, either up or down. And then I like to look, okay, what was the worst case scenario? So in this example, you can see the smallest move was right about here, 6.32%. So then think about it. So if you could do a strategy where you set something for, okay, at least it moves up 6% or down 6%, and if you can make that even less than that, then you've got a pretty high probability winning trade. So for example, if the lowest move here was up or down 6%, it was down 6%, what if we could do a strategy where we could set a trade up for all it has to do is move plus or minus 5% up or down? Then we're inside that. That's pretty high probability trade, right? That's a 100% potential winning probability trade. So that's something we'll look at. So this gives you these kind of opportunities, and then you just have to think about, how to trade it. All right.